Good morning, ladies and gentlemen. I was actually going to stream today, but I figured I'd hop on for about an hour. Obviously, wasn't on past couple days, Christmas. Then busy Monday, busy Tuesday, so wasn't able to be online. And I'm busy today and busy Friday, and I'm doing some cleaning up and slight renovation at one of my rental properties, which is obviously why I got to kind of split a little bit early today in the next couple days. But, anyways, good morning to you guys. It's a Christmas miracle, yeah. So, anyway, sorry I wasn't back on the past couple days, and then obviously rental properties now vacant, so kind of in there doing some cleanup and some renovation at the same time. And that property is about 35 minutes, sometimes 40 minutes away, depending on the traffic. So I gotta take some travel time. It's not like right down the street. So, anyways, yeah, market was fun today. We're just gonna basically cover what happened, ways that you could have viewed the market, attacked the market, and strategy and edge like we normally do. Giggle, and then we're gonna hop offline. So, yeah. All right, so we'll start with kind of the go-to stuff for me, which is going to be, you know, starting with this regular trading hours chart. We're going to go into the 30-minute here. This is TradingView, obviously. All right, so looking at TradingView here, what do we have? We have the market's in a buy signal since when was that? Was that Tuesday or Monday? Today's Monday. Wait, hold on, I'm tripping because we had Monday and then obviously holidays. Yeah, it's just weird when you always have these split up in short weeks. But anyways, so looks like on a Monday we had a buy signal on the market. Monday, then obviously Tuesday the market pumped, and here we are on Thursday. So on Monday, late Monday evening, late Monday in the trading day is the way it looks like, the market went into a buy signal, right? Merry Christmas, Semper. Yeah, thought I wasn't going to be on. I'm like, I can at least hop on for like an hour or so. All right, so you got a buy signal on Monday. So if you didn't have the assumption, right, if you weren't long bias this day for oversold reversal strategy, and then you were not long here because volatility index entered a sell move, then you could be long here because the market entered a buy signal. All right. So I would say over the past week, right? Well, let me rephrase that. This right here, that circle, that's the buy move. That's the buy signal on the market. Once you're above that, you naturally want to be long bias. Now, one will look at this chart and go, well, if you get long here, what about all of this? You missed a bunch of the action. I don't want to miss that. I want to be a part of that, all right? You can be a part of that. You just aren't using an SMA strategy, or at least this one, because that's just not what you'd have to do. You would either be using, again, if you wanted to be long down here, you have to use oversold metrics and reversal trading kind of thought process and approach. Then I would say the long bias move here, you could say is a higher low from here, but I would say the reason to be long here, for me at least, would be the sell signal that happened on the volatility index. And then the reason to be long in this area would be because the actual market entered a long move, right? So Powell dumps the market below 50. That's a sell move. Market is oversold, so we do a short-term bounce and squeeze up the market. We perform a higher low, which is accompanied by a volatility index sell signal, hence go up, and then the market then turns positive here, and now we're on a long. All right. So the market's in a buy signal. It has been since Monday afternoon. You shouldn't have been bearish the market anymore at that point. Today, we were overall long bias the market, but looking for short-term pullbacks to kind of start the beginning of the morning. So we'll cover that. So looking at SPX and SPY, we'll go over here first. Yeah. So you can see today we opened with what, a gap down. All right. So if you looked at today's market, you know that it opens with a gap down. So we are going to be looking bearish to start generally for a 161 gap down target. So we'll be looking for a pullback to 161 target, but knowing we're in a buy move, right? So today, my approach, and when we woke up in this morning and talked to everybody in the private group, pretty much said, I haven't been here for a couple days. I'm kind of getting my bearings straight. Lean on brand today, but with the way things are kind of set up, I do think we can do a little bit of a pullback to start this morning and then kind of go from there. So my idea was pullback to start this morning. And you'll see we start with a little bit of a long press to drop and then back to a long. All right. So kind of part of my reason for being more on the sell move to start the morning was mainly, you know, we got a gap down. So I'm going to give the market the benefit of the doubt to at least attempt its kind of move to the downside because of gaps, right? So let's see right here. All right. So, or sorry, that's 261. Here is 161. So right, there's 161. So if we go into, say, we'll just do like a look at a 1 minute real quick. We'll go into a 1 minute, and then easy. I see your question. I'll get to it. So here would be your first kind of sell move based on the gap down. So that'd be 161 right there. Goes a little bit below, sure. All right, cool. If we go over to SPY, again, we a lot of times look at the same thing, SPY, SPX. So if we run the gap system down on SPX, we would be looking for a 161 target. So again, you're going to see market starts up, does a little golden pocket back test down to 161 and bounce. All right. So ultimately, we had the SPY and SPX sell off for the gap down, go get 161's downside target, and then the market goes into a reversal and stays long, right? But that kind of makes sense because, again, we're in a 30-minute buy signal. We're not in a sell move. So we're using gap down, short-term metrics to be bearish, and then obviously the market flips back long. All right, and then pretty much since the market bottomed, we did this all live on the private stream, which was pretty much once the market bottomed here, we said, all right, you're going to be looking for the pullback to back test long 1 minute volume weighted average price setup. So once we bounced, we said, okay, you're going to look for a pullback to here, and then that's where you look for your 1 minute long scalp move. All right, so that would be 1 minute long bounce scalp. All right, cool. Then from there, it just becomes 1 minute chase up strategy. We'll just go from this bottom here. So once the market bottoms here, again, we're using some 1 minute chase up strategy, which is pretty much taking each little dip on the 1 minute, forecasting it forward, and then using that for the next dip and so on and so forth. So again, you can see the bounce, pull up, there's your dip, there's your long, and then we just repeat the process, go low, go dip, here'll be your next dip, and then we repeat the process, go low, go dip, there's the next dip, and then repeat the process here, go low, go next, so on and so forth. All right, so that's pretty much that. And so, yeah, that's pretty much the day. Now I want to bring down the VIX, talk a little bit about this. And actually, before I do that, I'm going to actually answer Easy's question. So what happens to the first tag of the 50 SMA retest is a short? I mean, yes and no. I mean, all I can say is the story goes. If the market is below the 50 SMA, it's bearish in relationship to the SMA. Yeah. And then, you know, and I'll say that we haven't really seen that very often, nor have we seen it on the long side. So, like, long story short, market doesn't have to bounce at 50 SMA. Market doesn't have to have a rejection at the 50 SMA, but it is, in fact, the over-under dictating point for bullish-bearish, right? So, ultimately, if the market wants, so let me rephrase that. If the market wants to stay bearish and the market bounces to the 50 SMA, then yes, there's going to be a rejection because the market hindsight, right, wants to stay into a downtrend. So the 50 SMA being the over-under point, right, market can go above it and then sell all the way to it and still be bullish because above it is support and below it, it flips, right? So you're asking like right here, all right, past couple days, right? So I mean, was there not a rejection at the 50 SMA? There was, right? So market bounced, puts in a higher low, grinds all the way to 50 SMA, has a rejection, and then turns positive right there. There you go. Again, it's the over-under dictating point. So if the market wanted to stay bearish, it could have easily just rejected and stayed into a downtrend, right? It decided that it doesn't want to do that. So, and I will say this, the market generally, I mean, I would say it does and it doesn't respect it. I mean, sometimes, like even right here, look at this, all right? So on this day, all right, look at this right here. So market breaks over the 50, bounce, go, right? So that's a day where the market did exactly what you're saying, but just on the long side. Even the same thing back here, ready? So this is what we call first tag rules, alrighty? So right here, so market goes over the 50, pulls back directly to the 50 and then goes. So the same thing you just said works perfectly on the opposite side back here. So the trade in that concept is valid. It just may not be valid every time you try it, right? And so you may have tried it just the other day on the sell move. And even look at here, right? Look at how it works here, but it's not perfect, right? So market is below the 50, bounces all the way to the 50. They try to break it, and then it rolls back into a short, right? So though it may not have held the 50 SMA and traded perfectly, pinpoint decimal perfectly to the 50 SMA, it did in fact reject that area. So the concept being the market is bearish below the 50 until it, or even right there, look at that one, right? That one's another good example. Check it right here. All right, so this is that concept playing out in real time for you again. So here's your breakdown of the 50, breaks down, back test, a little over, and then down. So there was a bearish move there, and then it's back to bullish. So again, it does work. It just may not have worked the time you're looking at it. And then here's something else to remember as well. Historically, the market goes up. It doesn't go down. So historically, trades will tend to work a little easier and better going up than they will down, because going down is fighting against the overall historical trend of the market and the economy, right? So do remember that again, there's more gains to be made on the upside than the downside, unless obviously you're in a bear market, which we're not. So do remember that too, that generally the buy signals are going to be better than sell signals, and buy signals tend to last a little longer than sell signals. Because things generally go down faster than they go up, but also because historically we naturally go up more than we go down. So do keep that in mind, right? So something to think about and keep in the back of your mind. And then also I will say this too, that for rejections and sell moves, we don't only look at the 50 SMAs. We'll look at volume weighted average prices too. So like, for example, on this day here, let me put this on it's fine. So right here on this day, we were looking bearish the market in this area because of volume trend. So though the market is not back testing the 50 SMA for rejection, we were looking bearish here on the top of that candle because of volume trends for that day. So when a market's in a sell move or a buy move, we could be looking to get long a dip or looking for resistance in the short term well ahead of a 50 SMA, because there's other reasons to be bearish, right? So this is what you could say, this is one strategy, right? This is the SMA trend is one strategy, right? And then upon that strategy, we may look at Fibonacci. Like for example, I can show you right here on an SPX chart. Watch this. So the market's below the 50 SMA, which then means what? The market is bearish until it's above the 50 SMA. Even though it's bearish, we still looked for an early morning long press on SPX this day. So ready, on this day, the market's bearish because obviously it's below the 50 SMA. But on this day, what happens? It opens with a gap up. So my first initial thoughts are maybe we can do a little bit of a gap target long and then be back to bearish, something like that. So you'll see on this day, even though, again, market's below the 50 SMA, which means it's bearish market, we were still looking at a little bit of long press in the morning because our gap Fibonacci system said we could look to do that. All right, so on this morning, we would be looking for, again, a long press up towards the 161, which would be right about there. And we missed it by about a hair, but it was about there. And then we could maybe get back to the sell side. So you can see how multiple strategies can come in at any time and what have you. But then also, ready? So like, when does the market flip bullish? Ready? So the market is bearish because it's below the 50 SMA. The market rejects the 50 SMA here, gets pulled back, and then it, what? Gets over the 50 SMA. And also, when you say, what about the market rejecting the 50 SMA first attempt? Is that not a rejection first attempt? Ready? There's your sell move. There's your oversold bounce. Back to the 50 SMA, that would be the first attempt. From when? From the start of the sell move. So that was. And then the market only dropped, well, that was, $5.9 to, $8 a share there. So that first attempt rejection only dropped by, 80 points or $8 a share on the SPY. And then we went over the 50, and then we went into a buy move, and then sure enough, where are you at now? All the way up, because the market's in a long. So there was a first attempt rejection there. Totally. Yeah, and guess what? The market stayed bearish, did it not? And then not to mention, this is really just a 30-minute high or low. I can see it. Look at that. See that high or low? So that's another thing I would look for is 30-minute high or low rejection, or support and resistance and blah, 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 right? So we would basically have a bearish move, oversold. Then on this day, we run a gap up Fibonacci back to 1 5-minute sell trend down. And then this day, oh, here's another one too. What about this day? So on this day, you can see we had a gap down, right? Look at on this day. We actually had a gap down here that does not go to 161, but it gets close. So you can see on this day we had a gap down, and it does not go to the 161 target. It moves that way, shies, and goes up. Now, those of you on YouTube won't know it, but during our private Zoom stream session on this day, I said, hey guys, there's a gap down. So obviously I'm going to run the gap down system. But today's a day where I think the market is too oversold and it's into support. So today's actually a day where we would probably look to trump the Fibonacci because the oversold reversal metrics are so strong. So today's a day where the market's already gone down so far over the past couple days. And yes, we have a gap down, but today's a day we're probably not going to be using that. We're going to be looking to reverse the market. And the whole reason why is the oversold metrics and reasons for being long reversal are stronger than that of looking for gap and down and continuation lower, right? So there's days where you just kind of have to, bias and psychology of the market might trump an actual, strategy you might have, all right? And so really all we have here is an oversold, right? So you go from sell side to roll down, oversold, bounce, first attempt at going positive or first attempt at staying bearish, trend, rejects, sets in a 30-minute higher low from the previous low, VWAP, then bounces, gets positive, turns into buy signal, right? And so if we just look at the entire chart structure, ready? Look at the 30-minute chart structure. Here is down, pop, lower high, down, goes up, breaks previous structure high. So that means it's trying to start an uptrend on the 30-minute, right? Then pulls back, creates higher low, and now you have up. So you can actually see the visualization of the higher low transition. So yeah, first attempt rules do apply. You just, it just depends on if it's really first attempt you're seeing or not. And then 1 second, you can see here, look at SPY. So SPY never tested the 50 SMA there. You can see that how we're down, never test the 50 SMA. So again, you do have to watch the SPX. The system is best used on the SPX, but again, we use the SPY so frequently that we're also looking at that. So it's the same strategy applied, but again, you really should be watching it on SPX, and then SPY sort of that secondary market you look at. So that might be it too easy, is that you might have just been looking at the SPY, and if you're looking at the SPY, then the first attempt at the 50 would have been here, but in reality, the first attempt was here, and you can see it on SPX. So, yeah. The Dow is green. Oh, yeah, I've been meaning, I didn't check that. Hey, yeah, we started a buy signal on the Dow, so, yeah, you can finally be long biased the Dow market. Again, that happened just on Monday. So that's another thing too, is like this buy move that we got. And again, we'll see how long it lasts, but the buy move that just happened during the Santa rally, all that stuff, that was also accompanied with the Dow Jones finally going green. So when you look at the SPX chart, it's not only the SPY that got bullish here, right? It's not only the QQQ market that got bullish, but you also finally got the Dow Jones to go bullish, which was the first time it's happened in a long time, right? This thing's been in a sell move and just down. down. Back test down, bullish. Right there. So yeah, finally the Dow has even gotten bullish. So it's an interesting buy move. You know, finally getting the Dow bullish along with SPX and all those other things. So then we'll flip into the VIX, right? So if you look at the VIX, let me put this on a full screen here. Again, if we look at the VIX, obviously we know it's been in a buy move, right? So it broke over. It's been in a long move, right? Now what? It crashes, tries to hold to 50, and then breaks down. So just the other day, you can see the volatility index went bearish. So obviously if the volatility is going to decline, then you're going to look long bias the market. And that happened on, Monday. Wait. Monday, yeah. So Monday, 10 a.m. So let's go back to the SPY. So watch this. If we go back to the SPY on the 30-minute, let's go to Monday candle, Friday. We're going to go to the Monday candle, 10 a.m. Monday candle on the SPY. So ready, here is Monday. All right, so Monday, 10 a.m. So right here, this candle. What could have told you that you should be long the market here? So look at that 10 a.m. candle on the SPY. You know, what could have told you that you should be long bias the market there? Now you might be like, yeah, there's a higher low, or maybe there's support, right? What I want you to focus on here is the volatility index. So though the market was going down and it looked really bearish here, which it was, right? What could have said, I'm actually going to start watching the market long here? You could have looked at the volatility index, right? Because the volatility index on that day, let me delete all these drawings, the volatility index was entering a downtrend. So if the volatility index is entering a downtrend, which means it should or can likely wants to go down, then we know volatility will decrease. And if volatility is decreasing, comfortability comes back to the market, which means long, right? So if you look at this candle here, put a little arrow there. So that candle, and I'll just put this little box over it that you can't even see. I'm going to point to it right there. So that candle right there, that's the 10 a.m. candle, all right? And my times might be a little different than your time, but just bottom line, this candle right here, all right, is doing what? It's breaking down the 50 SMA. So this candle on that day breaks down the 50 SMA. And yes, the previous day you had a test of, and you might have had a, again, I'm not here to go, well, what about the past? No, just stop. The reality is the market on the VIX broke down the 50 SMA at 10 on the 10 a.m. candle Monday morning, all right? As a result, all right, I go over here and I'm looking at the 10 a.m. candle or what have you on the VIX, all right? There you go. So you have, I'm trying to get it into the screen here. Sorry. So, you know, on this day, let me bring that back up. VIX. Again, on that day, you could have been looking long bias the market on that sell-off because the volatility index entered a downtrend. So a lot of times that's how, and like I said before, is that if you look at the SPY or SPX for that matter, you know, it wasn't uptrending yet. So we didn't start an uptrend till here. So you're like, Connor, you said you can't be long bias the market until it goes into an uptrend. Yeah, so that means you'd have to wait till here. But I'm also here to tell you that you can use the downtrends on the volatility index to be long the markets before the markets enter an uptrend. They go hand in hand. Just like if the volatility index starts entering an uptrend, before the market enters a downtrend, you can look to short tops of the market, even though it's not in a downtrend, because its co-partner in crime is signaling to, right? So the VIX is there as sometimes an early indicator of what the markets are going to try to do. So you could have, again, used the volatility index downtrend on Monday morning to be long the markets, which would have been in the bottom of this dip, even though they look bearish and are not in an uptrend. So I would say that's pretty much the market over the past week or so. So yeah, it's just a long bias. We're back to a long bias market. That's pretty much it. Until there's a reason to fully flip bearish, then there's no reason to flip bearish. Other than maybe, like we said this morning, we're opening with a gap down, so we're going to apply some Fibonacci gap down tactics to be bearish to start the morning. Right now, we're in trend positive. Just because we're trend positive doesn't mean the market won't pull back. The market is going to pull back. It's going to have pullbacks, just like you saw today. It pulled back, and then it got bought up. Again, we're in an uptrend. But there was reasons to pull the market down this morning, obviously. And so now we're just back up. And that's pretty much it. Yeah, keys are, and again, you have to, you got to decide for yourself what oversold means. Like I said, you could use RSI, you could use stochastics. Actually, I will say this isn't a perfect system, but I will say here's an indicator you guys can use that I don't look at it all the time. It's just because, again, I look at already so much stuff, and eventually your charts run slow and it can get a little cluttered. But these things are always in the back of my mind. And occasionally, what I'll do is I'll put it on real quick, take a look at it, take it off. Right? Like when I think it matters, I might like a MACD. Like I don't have a MACD on every single one of my charts. I might have it on one chart here, and it's like, oh, well, I kind of think, so I'll move the ticker and be like, well, what's it look like? Or I might be thinking like, oh, I think the stochastics might be like at play here. And so though I don't have it on, I can think about it, and I might just go and put it on real quick, look at it, and then just take it back off. But anyways, so I'm going to go ahead and add a stochastics here. And again, I'm not sure that the calculations are going to be perfect to like yours, but they're all relatively the same and should be the same. But some programs can be a little bit different. Do I even have it on here? I don't know. Let's try. Should be this. Oh, that's a strategy stochastic. I'm like, that ain't it. This should be there. You know what? I'm just gonna bring it up on TOS and make everyone's life a little bit easier. All right, 1 second. So we'll go ahead and add it here. So what I was gonna say is, stochastics actually does a decent job at catching, like letting you know reversals here. It's not perfect though. Is it stochastic? I think it's stochastic slow. Should be. Yeah, I always get them confused from time to time. But anyways, so let me take all this off real quick. This is some NQ stuff. We're gonna go back over to SPY, or we'll do SPX. We'll do SPX because I want to get you in the habit of watching SPX equities. Show etc. All right. So there'll be times where like this works pretty decent for catching reversals, which is basically, it suggests, wow, those are both red. That's gonna not be easy for you guys. I must have done something a little bit ago, but I'll just change this over to blue or something. So again, like I said, this could look a little different than yours now, but pretty much when the two little squiggly lines cross below the horizontal line, that means the market a lot of times is getting ready to reverse. So, like take this move down, right? So, and I'll put this on a full screen real quick. So take this move down. Actually, you know what? I'm going to reset this to factory default. I should be able, yeah, I was just like, hold on. Can I just reset why isn't it? Hold on. Oh, that's weird. Why won't it let me reset whatever. I don't say. I was trying to make the colors exactly the same if they're not as yours for factory reset. But anyways, all right, like I was saying, stochastic slow. Good one here. So sometimes I'll take a peek at this and get an idea for reversal. It's not my go-to stuff, just anyways, but the whole thing is, you can see obviously the market breaks down the 50 SMA. It's in a sell move, right? Then you can see down here, stochastics is going down, yada, yada, yada. And then right here, you can see we get a transition of the two moving averages below the horizontal line. So this would tell me that this 30-minute chart is oversold, and the stochastics is telling me we have a potential reversal at hand. And that was a day before it actually reversed, right? Are you supposed to get it a day before or what? Sure, maybe. Again, it's the whole, it's irrelevant. Those are the what ifs, right? The what ifs are the what ifs. But the reality is, again, we had a reversal signal on the 30-minute stochastics before the market reversed there, because you had a positive cross of those two column 2 SMAs below the horizontal line there. All right. And so that's supposed to kind of identify as a potential reversal. Now, is it supposed to give you the identify this sort of reversal? No, it's not, right? This is short-term stuff. Just like here, right? You can see just like overnight, like you had a reversal here and a pullback, right? So the stochastics throughout this whole morning was saying reversal and down, but we know we're in a buy signal. So again, these are some other little additional things you might be able to watch and pay attention to. You know, if you're thinking about reversal systems, right? Or you could have looked at the MACD, right? So look at the MACD on the 30-minute. MACD was bearish, right? That whole move and rolling over and down, I mean, the 30-minute MAC had no selling with it. So that would be like another thing. You could be like, well, the momentum's really not that strong on the sell side here, you know, so is it really going to keep going down, right? Those are the things you think of. So there's a couple ways you could look at some oversold stuff there. Well, all right, let me rephrase this. Yeah, so easy. No, you don't have to look at the spot. You don't have to look at SPX, right? All I'm saying is that each market has importance to it, and if you're really going to pinpoint price action, then yeah, you're gonna pay attention to it. But you can just make your life real simple, and you can just look at the SPX. Again, SPX and SPY are pretty much the same. Occasionally, they're going to be a little different, and I can show you why it's important to look at both. Why? Because if you look at SPX, you can see the perfect rejection of the 50 SMA and the transition back to positive. If you were only looking at SPY, you would miss that piece of information that could be valuable to you. Do you have to look at both to trade? No, you don't. But you would have had to look at both to know why we were rejecting here on the chart that day. You wouldn't have found that with the SPY. So you get to pick and choose what sort of data and how much you want to be able to interpret at once. But you don't need to look at both. But like I just said, you would have missed that little piece of data there, unfortunately, by not looking at both, and so on and so forth. And if it's too confusing, right, if you're looking at both and you're getting a little thrown off, then obviously I would say dial it back and don't look at that much, right? What SMA indicator? Arashi, I'm not sure. I mean, I'm just using SMAs. You could have, I mean, there could have been something on the chart that was, if anything, it's an anchored VWAP maybe. It's probably like this. That's probably what you're seeing was an anchored VWAP, something like that. Bitcoin, VWAP 1 doing nicely. So still holding support there. Cool, cool. Yeah, you know, not that this isn't going to matter for you guys right now, but this was our VWAP 1 support that we talked about in our private group this morning. And when I say private group, it doesn't, man, you guys, again, most of you are either in there, you know, seeing all the stuff we can do for years. You know, like I said, YouTube doesn't really give us a whole lot of new people to our channel anyways. But this would be basically one of our Bitcoin supports here. So for those who are curious of Bitcoin, pretty much all that's happened is we've bounced support down here, then we rallied the market back up to trending resistance, and then back down to support. That's it. And yeah. And obviously, until we go through VWAP 1 and VWAP 2 that you see here on the screen, we're not going to sell off too much more. If not, we're just going to bounce into a higher low. So right now, we're just going through what I would call first attempt VWAP long, right? So this is the market selling off down into VWAP support. So the market is doing the first attempt bounce. All right. Yeah. That's all we got going on there. Oh yeah, by the way, hopefully you guys had a good Christmas. I didn't really say that, but hopefully you guys had a good Christmas. Yeah. And then something over here, yeah. So you guys already have it mapped off, so you guys can just take a screenshot of this. It might change a little bit, but I mean it's already all set up for you guys. So if I may, ready? So this was our sell off to support, then bounce to expected long targets / daily lower highs, then we lower high it. Now we're just down into the next daily support, and if we hold, then great, we bounce, whatever. But we're only going down to this next breakdown target like we have on the screen. Obviously, if we go below the lows, which sounds kind of dumb to say, but that I always just go from supply and demand pretty much. So until we're below this demand spot, you're not going to go get these targets. So as far as a short-term trading concept, we're not really looking, well, it's debatable, but again, you're not really looking for the next breakdown, which is going to be like somewhere into this 91,000 to 89,000. This zone was not so straightforward to figure out for me, and that's why you kind of see a bunch of lines in there. So it's kind of like meh, not the most straightforward thing. But that's our next breakdown support zone. So if later, next day or two, couple days, we actually take out VWAP 1, 2, and then get a successful sell-off, we're going to be targeting down to here, down to here. And then obviously as we get to here, we'll look for a bounce, and you're going to look for a bounce like that. And so on and so forth. And then we're going to take this bounce up to the next lower high and something like that, So, yeah, I mean, that's pretty much all you have to concern yourself with Bitcoin for the moment. Yeah. Yeah, so again, SPX is really, I don't want to say it's better than SPY, but it is important as it relates to that over under 50 SMA trend. So you do want to pay attention to both there. But yeah, I had to hop on here and give you guys the whole spiel and rundown, at least let you know that the market is in a long bias trend, so you're not sitting here just trying to short the market for forever and then just get blown out because you're on the wrong side of trend. Also, that being said, you're not early by any means. You're not early to the long by any means. Again, the earliest you could have been long would have been for the reversal strategy. If you miss that, then you could have been long the markets here in this area so you can be long because of reversal strategies here. You could then be long here for what I would say would be VIX strategy. You could then be long basically in this area for SPX and SPY SMA strategy. Long here for SPY / SPX SMA strategy. And then, yeah, and then you would just, and then now that you're positive trend and long bias, then, you could have been long on this day here for, and I will shrink this fib to like right there. You could have been long on that day for Fibonacci, whatever, fib gap up strategy. Then you could have been a little short bias to start this day because of, gap down strategy, but I'm not going to get into all that craziness for the moment. Well, I guess I could. But yeah, then you could have been a little bit short bias for a pullback to start this morning because of fib gap down strategy. Fib gap down strategy. Right? And so there's a lot of different strategies you can do there, or you could literally just take your little handy dandy drawing tool and say you could just be long because the market is positive. And you just buy and then just take some profit on the way up, and that's it, right? So there's a lot of different things you could do there, and a lot of different things that we teach, and a lot, even more than that we'll cover on a day-to-day basis, right? So that's how I was gone for a couple days this week, but looking back at it, I mean, that's exactly it. You have reversal strategy, then you have VIX strategy, then you have SMA strategy, then you have Fibonacci strategy, and then along with some pre-market strategy, and then a data candle strategy, and so a lot of ways you can involve yourself with the market over the past couple days. SPRC, I have no idea. Looks like SPRC entered a long operation a couple days back. Yeah, if you look at SPRC, it entered a long operation on Monday, and then they successfully launched a long operation. So ultimately, you should have, you should have been long on Monday, right in the afternoon session here. Any one of these candles. And again, it's not easy to do this. So when I say you should have been, it means there's highly likely that you wouldn't have been. And so if you wanted to have been long this equity, your low risk entry would have been 21 cents, because that's where the market started an uptrend in the short term. And that was the back test of the short term uptrend. And then they released a buy algorithm and blew the stock up. So that's how penny stock pump and dumps. I don't want to call it a pump and dump, but I'm just that's how that market operates. They operate on obviously buying algorithms. So you can say right here, it was not the retail that all of a sudden was interested in the stock. So that has nothing to do with it. It's not because maybe there was some positive news released on it. It's merely the stock entered an uptrend, and this was one of the stocks, SPRC, that was selected to have a buy algorithm set off, right? So whether there was enough volume to trigger the algorithm or what have you, you can just say that people that control, so we'll write that on the screen. All right, so people that control the market set off a buy algo today, right after the uptrend start. All right. And that's pretty much what you're going to see on almost all penny stocks. You will see they start an uptrend, and the ones that they select to run a buy algorithm on blow up like that. And the ones that they don't will obviously kind of fail and go back into a downtrend. And so it's almost nearly impossible to catch those. You really have to have a nice scanner developed. And again, you're going to have to be up. When did this happen? You have to be up at you have to start your trading days at 3:45 a.m. If you want to involve yourself in this market successfully, and I used to wake up early and do all that stuff, but if you want to involve yourself early like that, you're going to have to wake up at, again, 3:45 in the morning, go get on your computer, have your scanners ready to go, biggest gainers list, all that stuff, and you're going to have to figure out which ones enter uptrends and go into buy algorithms. And then trade in the early morning sessions. And then you're going to also have to watch market close, because a lot of times they'll set off buy algorithms on penny stocks in the after hours. So your main objective is really to be on the computer right at the after hours market close, looking for buy algorithms that start on penny stocks that are also entering uptrends and blah, 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 blah. And then also doing that in the early wee hours. Because, again, their general objective is to blow a stock up without allowing you to get involved. And so, like we said, they will start up trends. The insiders will be in, and then they set off their buy algorithm. They blow up the price, usually when you're sleeping and not around. So by the time that most retail get up and or have their platforms that allow for trading, they'll be trading somewhere in the 7, 8 a.m., and then that's where you get this chop, right? So they blow it up when you're not involved, and then when they start to get retail involved, then they start to pull it back, and they form up the price action patterns that retail is most familiar with, right? So the buy algorithm goes off, they launch it up, and then what they're going to do is they're going to do it something like this. Then they're going to, oh, here, look at this flag pattern. Buy it, right? Oh, hey, look, here's another flag pattern. Buy it, dump, shit the bed, okay? So that's their objective. That's how the penny stock market operates, and there's nothing wrong with that. It's just that's how it operates. So if you want to involve yourself, you're going to be up at 4 a.m. every day, and you're going to be watching market close it every day. You're going to be looking for penny stocks that start uptrends on the 30-minute. If they start uptrends on the 30-minute and they're going to blow up and they're going to set a buy algorithm off on it, they're most likely going to have news, because they have to disguise the buy algorithm with news so that you don't think it's completely set up, right? So there you have it. That's why whenever you see anyone that does video, even myself, right? If you're going to do penny stocks, you got to look for ones with high volume, news, low float, right? High volume and news and low float. So low float can blow the price up. News is the mask, right? It's the cover up, right? It's the makeup on the woman's face. Nothing against women. It's the makeup, right? That's how we're dressing the stock, so they don't just think it's just a set up buy algorithm, which it is, right? So they'll have a selective stock that they want to blow up, and when they want to blow them up, they will. And again, they're going to disguise the algorithm in that blow up with news. So you're going to read the news and be like, oh, whatever, new therapeutic drug release or whatever, they get FDA approval, and that's why it's blowing up. I mean, it is true. Or, for example, we'll just say, like, here's a Bitcoin mining company. So some mining company just bought another 30,000 ant miners, and they're going to mine X amount of Bitcoin now per year, so that it goes up. So it's really just the market setting off a buy algorithm, and then they're going to time that up with the news, and now you're going to think it's because of the 30,000 Bitcoin ant mining machines, but in reality, it's just a buy algorithm they set off with the news. And then a lot of times when you're involved, it's going to be a little bit late, and then they're going to give you patterns that hopefully you chase into, and hopefully you keep blowing the price up for them. But eventually, the price will blow up to where someone, enough sellers take over control, and then they dump it out on you, right? And so it's just the way it operates. Yeah. Oh, in Benzinga? Yeah, Benzinga's, again, so like even like Benzinga, right? So Benzinga is definitely a news source, but they're in the, I mean, they're going to report the news. I'm not even going to get into that one, but yeah, I mean, news sources, right? They get information, people tell them things, and they report the news, right? So it's not like Benzinga just magically comes across this information, right? Think about it. Someone gives them the information, they report the news. Like, it's not like Benzinga just magically found this news out by no one, right? They're given information to then write articles about. Benzinga is a part of the system. They are of the system. So, yeah, that's that. Time we at 12:02. I'll hang out, man. I'm enjoying myself. I don't want to go work on my rental property, but it just makes it worse. It's like 35. It's not that bad, but it's just it's kind of a long trek. It's not that bad. But then knowing you're gonna have to do it like every single day for a hot minute, that's where it's like, I'm enjoying my computer. I'm hanging out. So yeah, hopefully that all makes sense. Hope you guys enjoy that. What's going on with the market, though, for real? Oh, it's going up? Why would the market be going up? That doesn't make any sense. We're supposed to be in a sell move. Just kidding. Supposed to be in a long operation, so makes perfect sense. Again, there's really, it does get a little old. Because, again, I just basically repeat myself day in and day out. It's not like there's anything new happening. It's all the same stuff. It's literally the same thing over and over and over. It's either market goes up, it goes down, right? And it's going to be positive or it's going to be negative. And that's really just it. I'm sure if we go look at the news right now, it's going to be like, Santa rally, he's back. Santa saved us, Inflation's not as bad. I have no idea, but it's probably something like that. So just for funsies, let's take a little peek-ski at Google, the Matrix machine, and we'll say stock market news today. What do we got going on? Stock market today. News. Stock market today. NASDAQ, S&P 500, Dow surge in start two. What do we hear? Oh, wait. What happened? Why is Yahoo not working? I don't know why, but it says stock market surge Santa ... because that's all I can see. But we know it says Santa rally something, right? So didn't even look at the news, but knew the news. I mean, right? It's obvious, right? I mean, that one's pretty obvious. Duh. If the stock market goes up, everyone's going to say Santa rally. So it's just like, it's duh. Here's another one. Investopedia from an hour ago. Dow Jones today. Stocks slip early in trading as Santa rally. Treasury yields slide blunt, but Santa Claus rally, right? Higher in short-term Christmas Santa rally. Christmas Eve tech stocks lift the market again. Like, duh. So again, that's what you should see when the market is in a buying operation, right? If the market's in a buying operation and it's long-sided and things are going up, the matrix is going to pump you positive news in an effort to further the long operation, but also just your typical echo chamber news, which is report what the eye sees. So the eye sees things going up, Dow's going up, SPY's going up, Santa Claus, rally, Christmas. Okay, so Santa Claus rally stocks are going up because that's, yeah. But then occasionally they'll give you something like the yen trade carry. You guys remember the yen trade? You remember how the world was ending yet again just a little bit back, but it was the yen carry trade that was going to end the world? So that was kind of a selling operation that no one saw coming, right? I mean, maybe some. There was actually some pages that saw that coming, right? But it's like, for me, I didn't really... No, I wasn't planning on one day we're going to wake up and they were going to be trying to kill us all with the yen trade carry fear. But it happened, and that was a good one. That was a really good one. That tanked the market pretty good. We went through a decently extended selling operation with the yen trade carry fear. But then eventually we went into a buy signal, and people were still all pent up on the yen trade carry fear. We blew them up, and so we did go from the yen trade carry fear to buy signal to everyone thinking the world was still going to end for a while from the yen trade carry. But then eventually they realized that wasn't going to end the world, and now it's not even in the headlines anymore. It's like, why? But I thought thought the world was going to end, right? There's even some people in the market still talking about the yen trade carry, which maybe they're right, maybe it comes back to resurface, but once we went into a buy signal after that, we were not worried about that. We were worried about pressing the long operation, and so right now we're doing the Santa Claus rally buy signal, right? And next year it'll probably be the same thing. We'll probably enter a buy signal right around Christmas, and that was the other thing too. Is everyone thought, not everyone thought, but that was the other thing too. Is you can see how just over the past week or whatever it was, how the market was down and now it's all the way up, right? So think about that. You can see how the market used Jerome Powell and the Fed stuff to tank the market. Then everyone's like, oh shit, it's like Santa Claus is not coming. Santa Claus rally isn't here. And then you can see how we just put the market into a buying operation here and then rally the market. And now what is it? Oh, the Santa Claus rally's back. Santa, thanks. But even though Santa Claus had nothing to do with it, it's just the market going into a buying operation. So we're going to go long the market, right? And now you're all going to read the news and go, oh, see, Santa Claus came back. But every year he's going to come back. And he's going to come in a different form. It may come with Jay Powell shitting the bed right before to make you think he's not coming. Or maybe Santa Claus doesn't come on, Christmas. Maybe he comes towards like the 30th of the month with the buy signal and then rallies it up, right? But Santa's always going to be there. He's just going to come in the form of a little red line, and he's going to be calculated at 50 periods, 50 SMA. But I would say that was it. Again, we just took the market to an oversold market, bounced it, and then Santa came through for us on the 50 SMA crosshair, and then we just triggered a buying operation. And just like that, the market goes from what? Down to back up. Santa. So that's really what you're seeing going on. Nothing more, nothing less. What other headlines do they got going on today though? S&P 500 rises 1% on Christmas Eve. Oh yeah, by the way, not that you guys, well maybe you guys knew this, but yeah, for those of you in the private group, this is another thing we discussed just about a day ago. Holidays don't necessarily mean choppy or slow trading. Actually, I think it's the opposite. Holidays lead to great rallies. Like Thanksgiving, we had some good moves. Pretty much anytime there's a holiday now, I pretty much think the opposite. I think we're going to have a good move. Because when nobody's around is when things tend to perform pretty good. When a lot of people are around and it's crowded, then a lot of times it's not so good. So I've kind of gotten into changing the mindset a little bit. Around the holidays, yes, we do have some choppier trading. Like leading up to it, maybe during it, but there's definitely going to be a banger day during it. Right after it, maybe right before, but don't discount the banger move right around the holidays, because it almost, the past couple years I've been seeing it almost always happens. There's almost always a banging market move right around that area because again, no one is around, right? Same thing with the penny stocks, right? They blow them up at like 4, 5, 6 in the morning because your little butt is sleeping in bed. No one is around. They don't want you around for it, right? So same thing with the holidays too, like Christmas Eve, right? I took off. I was busy. I wasn't there for Christmas Eve. What do they do? Rally off a buy signal. Like, duh. Figures, right? Christmas Eve, rally a buy signal. But the couple days before, dump it, right? A couple days before, dump it. Then, like, right into Christmas Eve, yeah, we'll just trigger a buy signal, and then we'll just let the algorithms run the market up like we always do. So, anyways, I got to get rocking and rolling. Like I said, I got to run out to the rental property, so it's only going to be on for a little bit. Just wanted to get you guys all up to speed and know that, you know, everything you're seeing right now is pretty normal price action, pretty common. There is nothing new under the sun here. All pretty much the exact same as it's always has been and always will be. And that's the beauty of it too, is when you get in the habit of, you know, kind of thinking like that, then you can go back in the stock chart and again, you realize that there is nothing new under the sun. It literally is the same old, and that is the market just transitioning to and from buy signals, right? So it just always is. Above is positive and below is negative, right? Up and then down, up and then down. You have up and then down, and then go back up, oversold reversal, back to positive. Then overbought top, reverse, down to trend, etc., etc. And it's literally just going to be that same exact trend patterning over and over. It's always a little different from time to time, but that's pretty much it. Back to positive, little negative, back to positive, boom, boom, boom. All right. And then the more you look at it, and the more you see it, and the more you get on, you'll start to see kind of how the news shifts a little bit. Right around these buy and sell moves. Like right here, market goes negative, then there's a huge gap down, and then there's another gap down. So right here, you know, the news is going, oh my gosh, minus 3% on the SPY, worst one-day drop in 300 days. Right? Like you don't even, you can just start making it up yourself. It's too obvious at that point. So, you know, so the more the more you watch the SPX 50 SMA 30-minute system, you'll see these short-term buy and sell moves constantly to the point where you'll just start to think it's a little comical as far as the news goes, because it's just like a rinse and repeat cycle. It just constantly goes through. So yeah, the more you start to see it, the more you kind of giggle at it and have some fun with it. And again, you don't have to. This isn't sitting here just to make you $1 million and. Just because you know when it's going to go up and you have an idea when it's go down it doesn't change the psychology of being in a trade or anything like that. But you just start to get a better grasp of the game, right? Literally the setup, like literally like a setup. You'll start to understand how it all just kind of works together as one ecosystem. So, nonetheless, I will catch you guys back. I'll probably be on tomorrow for a little bit, maybe like an hour, same thing today, and then. But it just kind of all depends because I'll be working every day at my rental until I get it to a place I like. Might be doing some backsplashes, some things like that. Not quite sure. So, you know, doing a little bit of an upgrade renovation. So until I kind of get it to where I like it. And again, you only get to do this when people really move out. So you're not all up in their space. So you only get so much time to go in and kind of knock things out. So until that kind of gets done, I won't do the longer streams. But yeah, I'll keep you guys back. That's it. Take care. Have a good day. And I'll see you in the next one.